All right, guys. So, welcome back to another live stream here. It is Tuesday, November 1st, the first day of the month. So, October was a good month for the markets. So, what I'm looking at this morning, I have taken a couple of trades on the futures market, but what I'm looking at is the gap scan, and I'm just not impressed. Just not impressed at all. I like to see some real movement if I'm going to trade some of these momentum stocks. This is just way too choppy right here, and this is our leading gapper. The float is ideal. The volume is there. It's just not doing much. It's just chopping around. It breaks VWAP, then it comes back over VWAP, and now it's just going sideways. So I don't really care to trade any of these stocks here on our pre-market momentum scan. It's just not worth it. You got to see that clear, decisive, real good catalyst, okay? This has nothing. None of these have anything that's really worthy of a good catalyst. So, not interested. The Russell was interested. I took 3 trades. Each trade was a winner. And the only thing that I did wrong here, well, they were all winners, but what I didn't do right, I kept shorting at the tops here, but that could have easily just kept going. So usually a trend that looks like this. Now, very clear uptrend here, very clear. And you have a lot of good forces behind the equity market today, right? So first of all, you don't want to trade against the trend. That being said, up over 1% futures, we've seen bits of profit taking, of selling off a little bit. And you can see here, I mean, that's a 5-point move right there. That's $250, $300 move right there. So there is room to get in both to the long side and to go short when it's overbought. But what I was looking at this morning, and I'll look at the SPY here in a second, I'm looking at the VIX, right? So yesterday we came on here, the VIX gapped up. The futures gapped down, all right? The dollar was rising, the futures were going down. Now we're seeing the opposite. We're seeing that gap for VIX get closed. We're seeing the dollar pull on back. And we're seeing bond yields going over here. Bond yields down a huge amount. Look at the 10-year, 3.94. Really big moves. So when you do see something like this, a lot of times our futures will look like this, right? This trending up on the SPY, all the way up to almost 391. So, this is a very big gap up with the overall market due to those 3 things that I just mentioned. The dollar down, the VIX down, the yields down. Same thing was yesterday, but in reverse, right? And you saw the market pull on back. Now, this is the day before a very critical day. Tomorrow is FOMC. So, what typically you'll see, and we saw it perfectly yesterday, is typically you'll see that range type of trading. As market participants, they're sitting on their hands. They want to put the FOMC in the rearview mirror before they go forward. Everything relies right now on the Fed. It has for the last 2 years. When the Fed is hawkish, the markets don't like it. Yields will go up. So if they start to have, strike a little bit, just a tiny bit of a dovish tone, which means, okay, they say something where we're going to get rates to a certain place, we're going to just start to pause a little bit. You could see the market like that a lot, but we just don't know. Inflation is still obviously way too high. So let's just take a look over here. We'll start on the economic calendar. For those of you that do your due diligence and actually know when the most important things are coming out, this is so critical when you're day trading to know these things. So this is what we have today, 9:45, and then a big block at 10 a.m. That's going to be potentially, maybe you get some whipping around a little bit. So if you're in futures, which is what I trade, you simply have to know these things because the tiniest moves can be big, big money. So a lot of times I will not want to be involved in a trade until after these reports come out and direction stabilizes and starts to show, okay, this is what we're going to be doing. Because if you're in a trade like this, how do you manage risk? It's very hard to do that. When you get that up and down, it's just almost impossible to do. So like I said, Wednesday, that's the big boy right there. At 2 p.m., they're going to announce most likely 75 basis point move. And then at 2:30, this is where everything happens. What you see at 2 p.m., what you see the algorithms doing at 2 p.m. is not necessarily going to be what you see at 2:30 when Powell starts speaking and he gets asked a lot of questions and has to answer a lot of questions. This is where the market can really start to gauge where they're at going forward, right? That guidance, that forward-looking guidance for the Fed. So that's Wednesday. And then, not that we have to worry about that right now. On Friday, we have the payrolls. We'll start to worry about this tomorrow. On Thursday, after FOMC is in, like I said, the rearview mirror. If any of you guys are tuning in, leave a message here. Hit up the chat, just so I know that the chat is working. I've been having some trouble with it, but I think I may have fixed it. So if you are watching, just type a couple of letters. I don't care what it is. All right, so let's look at the SPY. Before I want to show you guys something very interesting in the bond market, I want to show you what the SPY daily candle looked like yesterday. This candle right here. That's a doji. This is a candle of indecision after a big move, before a huge announcement coming up. This is the type of trading you see in a range, and it usually closes where it opened the day. So that can very likely happen today. Who knows? I don't have a crystal ball. I just know how to read these candlestick patterns. This is a lot of stuff that I use to develop where I see the market going. Now, it's good we're over the 50-day moving average. It was great that we stayed over the 20 EMA. This was the first step for this breakout of the base. Very well, said in here. At the time, 2 weeks ago, I said this. Breaking this and holding this was the first step to then making the move to the 50. We made the move to the 50 in a couple of days, saw a big rejection. This is totally normal. The next day came up, rejected it again, and then broke on through on Friday. This is textbook right here. Textbook. So that's the SPY daily chart. Not really expecting a ton of movement before tomorrow because, why would anyone put on big bets? I mean, they will be putting on big bets, but it's going to be hedged out. So you're going to see this type of, tightness until we get that rip one way or the other. All right, so that's the SPY. Now, what I wanted to show you guys is something that is setting up in the bond market. And this is something that really has predicted just about every single time. This has predicted this recession potential coming up. You have the 3-month note at 4.138. You have the 10-year at 3.93. This is now inverted. This started to go inverted a few trading sessions ago, and nobody was talking about it. This is something that once these invert, so the short dated notes right here, very short dated note, the 3-month, starts to invert with the longer dated notes, the 10-year. That is a clear sign that the bond market is starting to price in the potential for a recession. It happens in the past when these invert. It doesn't mean that it always has to happen. Historically, it does though. So if we look at this, this is a chart here all the way back to the 1980s, 1990. And this is the difference between the 3-month and the 10-year Treasury yields. These are recessions, right? This, whatever, lighter color, darker color, whatever this is. This is recession. This is when that 3-month starts to yield more than the 10-year. It happened here, we saw recession. It happened here, we saw recession. It happened back here, we saw recession. Again here, we saw recession. It's happening now. As we speak, it is now breaking this line, and you can just see by the graph here. This is not something I'm making up. Every time that it's done this, there has been a recession down the line, whether it be 6 months, a year. It's just been a very, very reliable sign for that potential for a recession. So that's why, that's why I'm watching it. And when I saw it happen a couple of days ago, I said maybe it'll just be, a 1-day thing, and then it'll start to stabilize. Well, it's kind of gotten a little bit worse. So that's why you want to look at this as well. All right, market's just chopping around here. It's expected. Just kind of making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows for the moment. And now we could be opening up at this key level here. So this is a key level from back here where we saw some overhead supply. It sold off, and now it's coming back to this point. Whether it opens up above it, below it, who knows what's going to happen from here. But like I said, once you get into that range of the day, I think it's going to stay in whatever range it develops. So keep that in mind. Whether it, sell off, whether it go up and then use support down here somewhere. I do think it might just bounce around a little bit. It could be a choppy session. The potential for a choppy session is definitely there. Got to eat my apple. An apple a day keeps the doctor away. Got to go with the coffee too. A nice balance for the health. All right, we've been live now for about 15 minutes, going on 16 minutes or so. Like I said, be aware of the economic calendar coming up for the day. So 9:45 and 10 a.m. There's a bunch of random stuff coming up, and keep in mind that it is the day before FOMC. So just keep in mind it could be choppy. Yesterday was choppy. I got chopped up myself. It was not a fun day to trade. So the same thing can happen today. All right. So hit the thumbs up for the video, and I will see you guys in our Discord in just a minute.